This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on July the 8th, 2011. At approximately 8:37 in the morning Mountain, that is 10:37 Eastern. Our radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, they're archived on Harold's website, HESradio.com, HESradio.com. His other website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. As we start the show, jobs numbers coming out from the United States. They only gained 18,000 jobs. There was an ADP report coming out on Thursday that said 118,000 jobs were going to be, that was going to be the announced number, not even close, 18,000. The number now, the unemployment number in the United States, 9.2%. April and May, they did a revision on the numbers. They actually had negative 44,000 jobs. Here in Canada, it was much better. We had a gain of 28,000 jobs. But Harold, precious metals did well this week because of concerns on sovereign debt, the debt ceiling in the United States. And this morning, we're sort of seeing a bit of a choppy market. It was up, it's pulled back a little bit. But overall, one thing I'm proud of, we've always been very honest and realistic on this show. And we've said the economy is not great in the United States. There were a lot of people cheerleading. It's not about optimism or pessimism. It's about realism. And the realistic situation is these numbers and the economy are not good. You were at a party a few nights ago with a lot of high net worth people, and they were all talking about the economy and how bad it was.
You better believe it. Again, if you watch CNBC or any of the financial shows in the States, the stock market's going up, which is confusing for most people because the economy in the United States is just absolutely plummeting. In actual fact, with the job numbers that came out today, the stock market's down about 135 points right now. But with all the bad news coming out, which is coming out basically on a daily basis, the stock market seems to shrug that off for some reason. The government is totally bankrupt. They owe $14.6 trillion, are lobbying to get another $2 trillion in order to pay their debt, but the stock market still seems to be able to go up. Go ahead and figure that one out. Well, today gold is up $10. We're now at $1,546. So again, gold has been very, very strong and held in there very strong all summer long. Silver, we had that issue, last month where the market went from 50 down to 32, but it's back up to $37. In actual fact, on last week's show, we reported that the market is trading in a range like it does seasonally almost every year. However, there was potential for the market, if it did break $32, to go down to as low as $28. If we get above $38 next week, and we have two closes above the $38 level, in my opinion, that negates any chance of the market going lower. So again, we're very, very bullish on gold and silver. All the fundamentals are there. The reasons that you want to own gold and silver, again, primarily are a very weak U.S. dollar, which will continue to weaken. We anticipate that the U.S. dollar will fall to about 71.5 cents by the end of this year. As the U.S. dollar falls, gold and silver prices rise. That's an action-reaction type of market. So basically, when the U.S. dollar drops, which it is doing and will continue to do, gold will continue to run. If we hit 71.5 cents, which I believe we will hit by the end of the year, that should push gold to about $1,850, about $300 higher than where it is right now. We anticipate that silver will also make a very strong move going into the latter part of the year and retest that $50 price that we saw just last month before the banks brought the price down by $16 in a matter of 4 days. But all in all, you can only suppress the markets for a certain period of time. The trend is always your friend. And again, the reason that we want to be in the precious metals markets are a weak dollar, which will continue. There's a very good chance that the U.S. government will come out with QE3 because nothing happened with QE2. If they don't stimulate the economy, nothing is going to happen. And by doing so, that will reduce the American dollar back down to not only 71.5 cents, where there's very, very heavy support, but once it breaks that level, it could plummet all the way down into the 50s. And we do anticipate that that is going to happen because the fact is The U.S. government needs another $2 trillion, and the fact is that by giving them another $2 trillion, what has changed? What have they done? They're just absolute spending machines here. President Obama has got like a blank check, and all he continues to do is spend this country into oblivion. So it's a frightening situation to really think that in this day and age that this is actually happening right before our very eyes. In fact, most people are in denial, and that's not just a river in Egypt. They really believe, as do most people in the United States, that the economy is not going to recover for another 5 to 10 years. And I believe the same scenario is going to happen. The real estate market, which really moves the country, is in dire straits. The real estate market in the U.S. not only has plummeted, but will continue to plummet over the next 2 to 3 years. I would not be buying real estate in the United States at this point. I would be holding back for another couple of years, as we probably are going to go into another heavy recession in the United States in 2012. And if the stock market falls, which, believe me, it could easily do, if they don't come out with QE3 or something like that, this stock market could absolutely plummet like it did back in 2008 when it dropped from 14,000 to 6,500. I would not want to have a lot of money sitting in the stock markets at this particular point. The reason that you want to be in the precious metals markets, again, a weak U.S. dollar, which is definitely here, inflation, which is definitely here, because the inflationary markets are raging. In actual fact, Canada just raised interest rates last month, or this month, because they're doing the right thing. They're fighting inflation. The Canadian dollar is very strong, and actually, in fact, it hit 104 this week against the U.S. dollar. But also China is raising their interest rates. In fact, they've raised it 3 times this year already. So the United States will not raise interest rates. They're going to keep their interest rates at 0, and basically they'll probably end up doing that for 2 years. By keeping their interest rates that low, that pretty well ensures us of higher prices in precious metals, because if they don't raise interest rates to fight inflation, then the dollar will continue to fall and gold and silver will continue to run, and that's what we do believe will happen. We are looking for substantially higher prices in precious metals. Again, we feel we'll end the year with gold at about $1,850, and we'll end the year at possibly we want to hit $50 silver again. We hit it this year. There was heavy resistance because that was the all-time high. The market pulled back to $32.70. It's back up to $37 today. No doubt that the market, in my mind, is going back up to $50. There's very heavy buy orders in the futures market above the $50 level that could easily push silver to $55 to $65 very, very quickly. You do not want to be out of this market. Again, these markets are going to fluctuate. They're very volatile at times, but we're not trading the paper markets. I hope we're not trading the paper markets. Every week we tell you not to do that. Don't trade the heavily leveraged futures markets, options markets, forex markets, because you're going to lose your money. 90% of the people do. Just buy the physical metal and sit back and hold on to it. The best example of that, those that trade in and out of the market, they miss certain moves, and you do not want to miss the moves. Look at the beginning of the year when silver basically went look at last July when silver went from $17 to $30 within 90 days. So you never want to be out of this market. That's why we're saying do not heavily leverage silver, because it's very volatile, and own the physical metal. You don't want to be in the paper assets. When the markets fell heavily back last month, almost $16 in silver, I think it was primarily because at the COMEX exchange, where they warehouse silver, did not have enough silver to meet the outstanding contracts in the futures contracts and in these forex contracts, and that's why I believe the markets came down. Gold didn't come down at all, and silver came down $16. So again, you don't want to heavily leverage that market because you're going to get knocked out of it. You want to be in silver for the long term. For those of my clients and listeners that took our advice 10 years ago, they bought silver at $4. You could have bought 10,000 ounces for $40,000. Now it's worth $380,000, and it'll be worth, in my opinion, $2 million because the price of silver, in my opinion, is going to $200 over the next 5 years. So with inflation definitely coming, countries are raising interest rates, so they're raising it because there's inflation. Just go to the grocery store and see what food is costing you now. Sugar is skyrocketing. Coffee, cocoa, grains, everything is going up. There is no doubt that we're going to be hit with massive inflation and a very weak U.S. dollar. Add to that what's happening in Europe with Greece and Italy and Portugal and Spain and Ireland and all these other countries. we're in big, big trouble, and it's a time to be extremely conservative. No speculation, no heavily leveraged. One bad move can knock you out of the market. My strongest recommendations: own gold, silver, and diamonds. We're heading into a massive bull market in diamonds also. All these situations happened back in 79 and 80. Gold went to $850, silver went to $52, colored diamonds went up 500%. That's where your money needs to be. You need to pay off some of your debts, keep your expenses extremely low, and hunker down, because again, when the U.S. economy goes into this type of problems, the whole world can suffer, and obviously Canada is right across the border, and a lot of Canada's economy is based on what the U.S. does, and the U.S. is screwing up at this point. So again, let's be very conservative. We're not only going to get through these extremely difficult times, but I believe the listeners to our radio show and our clients are not only going to get through difficult times, but we're going to make a ton of money. We've got 5 years to make a fortune in this market before interest rates go back up to 20-25%. And our goal is to make as much money as we possibly can in the alternative markets that we're recommending, and then put our money safely into the bank at 20-25%. Get our newsletter this week. It's loaded with great information. If you listen to what's happening on the television, you're not getting the true picture. Every week, Randy just digs and digs and digs for the important information, the information that we need to make an intelligent business decision. Because again, if you base your information based on what the U.S. government is telling us, you're going to lose every bit of your money. If you listen to our radio show and John Embry and guys like that, we've been in these markets for 10 years. We were the ones that called this, and we are the ones that that our clients who have been listening for the last decade deserve to make the money, because you were the ones that took the chance and the risk when everybody else was saying stay out of precious metals. It's turned out to be one of the greatest investments of all time.
To invest in precious metals, the telephone number 1-866-623-2002. 1-866-623-2002. There's only one company that Harold recommends you deal with. That is Worldwide Precious Metals. Their website, wwpmc.com. Speak to them about getting involved in investing in precious metals. And as I promised, I would go back and look for seasonality charts on gold and silver. We have them in our newsletter this week. Worldwide will be happy to send you those gold and silver seasonality charts. You can sign up for the free newsletter via wwpmc.com or call them at 1-866-623-2002. But if you look at these two charts in the newsletter, we are in the sweet spot right now for investing in precious metals. This is the sweet spot for getting involved in the market before it starts to make its move as we head towards the fall and on into winter. You can get the newsletter, wwpmc.com, the telephone number 1-866-623-2002. To invest in precious metals, go to the website, call that number. And it's interesting because I actually found a little more information on gold and silver seasonality. We have more than just those two charts. We have three others. And Don Vayu, who is on the Canadian Business Channel quite a bit. You may recognize his name. And he actually said that gold is entering its season of strength. The period of seasonal strength for gold bullion is approaching. Thackeray's 2011 Investor's Guide notes that the optimum time to invest in gold and precious metals, July 12th. July 12th for a seasonal trade lasting until October the 9th. Obviously, we are buy and hold investors, but if you're looking to start a position, add to a position, we're in that sweet spot right now. During the past 25 periods, gold bullion, precious metals, has outperformed the S&P 500 index by 4.7%. Also, Jeff Clark from KC Research came out and wrote an article, When is the Best Time to Buy Precious Metals? We have two charts there you can take a look at about June and the summer being obviously seasonally very weak, but a great opportunity to invest in these markets as we start to move towards the fall. We say this every summer, and there are people that take advantage of it, as was the case last year when silver was around $17, and then from there on in, it raced all the way up to almost $50. We believe that's going to happen again. Take advantage of it. Speak with Worldwide about investing in precious metals at 1-866-623-2002. Some very bullish prognostications coming out this week. $5,000 gold 3 to 4 years away, according to Rob McEwen. We have a video of that. He was